Global financial markets are in complete turmoil. The stock market is crashing. And yes, by crash, I actually mean a real crash. That's not something that's just being said lightly. It is literally the worst day in terms of losses for Japan since Black Monday in 1987. On a Friday, you can see over here, $2.9 trillion was wiped out from the US stock markets. That is the largest loss since March of 2020. And of course, Bitcoin and cryptocurrencies are taking a massive hit as this market is selling off along with all these global markets. And we are seeing Bitcoin here back at $50,000. So I'm wearing the red hat today. I think it's pretty appropriate. I've been saving it for a day like today. And I want to dive into the charts. I want to share my thoughts a little bit on what we're seeing here. It does look like it's a little bit of a mini black swan, similar to March of 2020. And it does have potential maybe to get even worse. So let's dive into the charts. Let me share with you what I see and potential levels to look for. So as I'm recording this video, you can see Bitcoin is trading at 50,000, and that drop was very, very quick because just a week ago we were at 70,000. Everything was looking great, and then the global financial markets, they threw a big spanner in the works because, you know, with all of that selling off and the kind of losses that we're seeing, it makes sense that crypto also sells off. We saw the same thing in March 2020 when all the financial markets sold off. Crypto also sold off in a big way. I don't know if you remember that. You can see it over here. It looks like a little blip in the chart, but it was huge at the time. We went from $10,000 to $4,000. That's a 60% loss in crypto in a matter of 4 weeks. But after that, they stepped in, they printed a whole lot of money, they bailed everything out, and we went from $4,000 all the way up to $65,000 in the year that followed. Okay, so yes, it is scary right now, but this is not the first time that we've seen sell-offs in such a way. Okay, even in financial markets, there's always these moves to extremes. We've seen the stock markets that have been going to all-time highs, new all-time highs over and over this year, and of course, at some point, that's going to unwind. We've seen insiders that have been selling their shares in their companies, Jeff Bezos and Amazon, the Nvidia CEO, the list goes on, who have been selling billions of dollars of their own shares, and they know that something's coming, right? So eventually, we do get a big drop in the markets, and the more that everything is pushed up and inflated artificially through leverage and buybacks and whatever you want to call it, the bigger and quicker the unwind is going to be, like we're seeing now. But not all hope is lost. First of all, looking here on this weekly chart, we are at exactly at a very key level right now, which is the 50-week moving average. And that is super key. That is the high time frame support that determines bull or bear trend. In the same way, in 2021, it acted as support here. We are still seeing a very, very similar way of the pattern repeat to 2021. Almost identical. We had this massive run up to April of 2021. It dropped for 4 months, right? So May, June, July into August. Exactly what we're seeing now. We peaked here in the end of March. We dropped April, May, June, July. Very similar. And we are now at that exact point, the 50-week moving average that in 2021 held as support and then was followed by massive upside and new all-time highs. Now, the situation could be a little bit different. Of course, the stock market is 4 years further along, and we are seeing these massive sell-offs. There is huge amounts of fear in the market. The question is going to be, are the central banks, the governments, is someone going to step in and be like, okay, this is enough. We're not going to let everything go to zero and completely unwind. We're going to step in, we're going to pump liquidity, and we're going to push everything much, much higher. And that is a very real possibility. Obviously, time is going to tell what happens. But remember, March 2020. Okay, let me get this arrow here. March 2020, when we had the massive black swan sell-off, that ended up being the best buying opportunities. When things drop like this fast, and I'm not saying you should go all in with leverage and you shouldn't overextend, risk capital only. Usually spot is a good idea because the volatility is super high on these kind of movements. But if you had bought anywhere between the $4,000 and the $10,000 level during that crash, you could have been up many multiples, and that's just on Bitcoin alone, right? So these drops, they present massive opportunities. Now, is this going to hold? Time is going to tell. For now, it seems like we might get a bit of a bounce. If this is going to hold, I think great, and we could potentially recover depending on what is going to happen today and the rest of this week in the stock markets, what we're going to hear from authorities, central banks, if they're going to step in, if they're going to inject liquidity and save this. I think we go much, much higher in the coming weeks and months. Obviously, if they do let it drop further and they don't intervene or step in just yet, then I think if we lose this 50K level, this 50-week moving average, the next stop for Bitcoin could potentially be this Fibonacci golden pocket and these highs over here from July of 2023. And that could be anywhere between, say, $30,000 and $38,000 if we lose 50,000. Okay, so for now, we seem to have hit some sort of support here, the 50-week moving average, which is also the highs here of 2021 on this rally. Potentially, we could be looking at some sort of support. Okay, but if we lose it, and even if we go into the 30,000s, I think that would be short term. I think we recover, and I think we still go a lot higher. So either way, it's a really, really good thing. If we hold here and they inject liquidity, we're probably going a bunch higher. If we drop into the 30s, that's an amazing buying opportunity. Personally, I will be adding more risk capital only because, I think that would be a bargain for Bitcoin, honestly. Alts are obviously getting smashed, but that's fine as long as you're holding spot and you believe in the coins that you're holding. I think no issues there. Now, something that's interesting here too is the dollar index, which last week closed red. Now, typically when this dollar index heads down, risk assets move higher. So if we see the dollar index continue to head lower this week, then it potentially helps us create support here for Bitcoin and risk assets. So that's something you want to keep an eye on too. And ideally, we don't want to see it get back above this high, above say 105. If this starts heading lower towards 100 or lower, it's basically like a tailwind for risk assets and for crypto. And that basically helps us with hopefully not going a lot lower and reversing and actually going a lot higher. Now I want to bring up here the S&P 500. This is a weekly chart and it's back at 5,200, selling off all the way from the all-time highs, which was almost $5,700. So it's sold off a decent amount. But if you look here, there's still absolutely no cause for concern at all. This is going back all the way here to 2007 and just adding the red 200-week moving average here. This is weekly, right? You can see this is still perfectly in a bull market. Yes, it's scary. We had a bit of a dip, but look at this. It's still completely above the 50-week moving average, which is just complete bull territory. Look, in this entire run since 2009, look how many times it just retouches the 50-week moving average and continues going higher. And yes, there's a couple of cases, a couple of occasions that you can see here on the chart when the price did drop back to the 200, to the red, right? You can see over here. So 1, 2, 3. Here it overshot it a little bit. That was March 2020. So basically, in the last 13 years, we had 5 touches of the 200-week moving average. So even if the price drops all the way back to the 200-week moving average, which is at this point about 4,340, then we could still be in a bull trend, right? High time frame bull since 2009. This hasn't been broken yet. So for now, the first stop here is this previous high and the 50-week moving average, which is currently at about $4,900. That is the first level of support that could provide the support. And if that drops, even if we drop to the 200-week moving average, it is still not officially a bear market in stocks. As you can see here, the 2000 crash and the 2008 crash, those both really only happened below the 200-week moving average. And the vertical lines here on this chart are when the Fed in the US cut interest rates after a hike cycle. And you can see what happened there. So we had this rate cut and then we had the 2000 crash. We had this rate cut here, then we had the 2008 crash. We had a rate cut here, it went a little higher first, then we had 2020, the black swan crash, then we continued higher. So I have this vertical line here in September, which is potentially when the Fed is going to cut rates. If they are or if they're not, that remains to be seen, because maybe with this kind of sell-off, they're going to pump the brakes a little bit and maybe they don't give a rate cut in September. The longer they extend it, of course, based on what we're seeing here, the better it is for the stock markets, because historically, since 2000, these rate cuts have led to declines in the market, as you can see here, 2000, 2008, and 2020. So if we do see a rate cut, whenever it's going to come, this data suggests that the months that follow after that rate cut, we will see more decline in the markets. And if the stock markets go down, it's very likely that crypto follows, as we saw in 2020. As we're seeing right now, global markets are selling off. Bitcoin and crypto are also selling off. And maybe now even more especially so, since we now have Wall Street involved. There's traditional vehicle, there's ETFs, which also makes it easier maybe to sell Bitcoin and to potentially even short Bitcoin. So if there is a global financial crash and markets go a lot lower for a longer period, I would expect crypto to probably follow in the same direction. But, you know, that's something that we'll cross that bridge when we get there. For now, I just want to point out that this little drop here in the market so far is what everyone is freaking out about. And you can see big picture zooming out. It's still only a very small little drop, and we're still completely in bull territory here on these indices. Only really once we drop below the 200-week moving average, below 4,300, then things kind of get into bear territory like 2000 or 2008, based on the chart and, in my opinion, and the data. So coming back to the weekly Bitcoin chart over here, you can see we're holding here at 50K for now. We bounced a little bit to 51,000. If this 50-week moving average holds as support, I think that's still a very bullish thing. It means the higher time frame, the weekly chart here, is bullish. And if we can hold this as support, I would still expect us to continue back to the all-time highs in the coming months. Maybe it doesn't happen right away. It really depends on what's happening, of course. It could be a quicker recovery like in March 2020, but you know, count on the next maybe 6 to 12 months. We still have that window after the halving, which happened in April. So personally, I'm not concerned. If it does drop below this 50K, I would be looking at a level between 30 and 38,000 for a potential bottom, and another area to really load up more on BTC, dollar cost average. Obviously, all of this with risk capital only. That's the most important thing, guys. You don't want to become a forced seller. You don't want to get liquidated. You don't want to overextend and get liquidated just before it goes on the biggest run that we've ever seen. Imagine they start printing money and Bitcoin first drops to 30K, you get liquidated, and then it runs all the way to 150,000 in the year that follows. That would obviously be very, very painful. So don't put yourself in a position where you overextend, where you're betting too big with leverage. And even low leverage can be very dangerous. Even a 10x leverage, which you might think is low, that means in a 10% drop, you get liquidated. And 10% drop is nothing in these markets, as you've seen. Bitcoin can sometimes do that in a day. So be very careful with leverage, with overextending. Stick to your risk capital, have a plan. With spot, you can't be liquidated. Bitcoin is still the largest, it's still the most likely to be here, and the more it drops, the more attractive it becomes, right? 50K buying Bitcoin, while it's still high, it's a lot nicer than buying at 70K. And if it ever goes into the 30Ks, well, then it starts to get really, really interesting. I don't know if we're going to see that, but if we do, you know, I wouldn't mind it. So I hope you enjoyed this video. I hope it makes you feel a little bit more at ease. Smash the like button if you do find this enjoyable. And if you want my daily updates on this, charts, insights, if you want to join the community, come and join Inside VIP. I'm in the Discord every single day. I'm sharing charts in real time as this is happening, trade ideas. We're making money long in the market. We're making money shorting the market. It's all possible. And of course, you get to join the whole community. There's more than 2,800 members. Come and join us in Discord. It's risk-free. My doors are closing end of the month. In my opinion, it's still the best time now to get involved. With a drop like this, this is when we start looking for opportunity, not when we start panicking. So come and join us in VIP. Try it out for yourself. It's risk-free for 60 days. Link is in the description down below. Thanks for watching, and I will see you in the next video.